And real quick here, guys, if you're out there and you're new, you don't know what we're talking about here. Jedi Options is a segment we put on each and every Wednesday whenever Coach Tyler is here. He's been an options educator in the markets for more than a decade, as long as I've known him, as a matter of fact. He's wonderful when he comes to teaching, and he's got a passion for it, quite frankly. Tyler each Wednesday picks a stock, a sector, an area, an industry, a concept that applies to the options market or options trading and focuses on it and highlights it. Tyler, what you got for us today?
I got so much I want to say and such little time, so I might go a little quick, but I'm going to take notes for you budding Jedis. All right, so gather around, listen up. I really like what's going on in energy this week, and by this week I mean like the whole week, but especially today. So it was very easy for us to identify what would be worth discussing today. I like the breakout in crude. We've already done the rundown of the chart, but here's the deal. So if you say, hey, I like this technical pattern, I like getting some exposure to the energy sector, how do I go about doing that? You go to the options market. It's like going to a buffet. You have all of these choices. You have all of these strategies. I'm going to explain to you the logic of why you might use a naked put or a short put with this XLE trade. I'm going to take a few notes. All right. I want you to think about when you're bullish. Okay, when you're bullish on something, what can you do? You can buy stock. That's the simple approach. If you want to use leverage and make it a cheaper trade, you can buy a call option. Or the third alternative is you can sell puts. Those are really the three core things you can do on the base level. Buy stock, buy call, short a put. The reason why you would short the put, you got multiple reasons. Okay, let's use process of elimination. What do I get when I buy a call? I get unlimited reward. I get limited risk. And you think, oh, unlimited reward, that's attractive, but it comes with a low probability of profit. You're swinging for the fence and you don't always connect. And so it's not a high likelihood that you're going to generate profits trade after trade after trade. You hit the occasional home run, but a lot of times you strike out. In this current environment, we got September upon us. You got some weak seasonality. The indexes have been a little shaky. Is this the time where you want to swing for the fence on an energy breakout? Me personally, not really. I feel like because of the backdrop, I'd rather increase my probability of profit and willingly give up some of the upside, because as we discussed in last week's segment, anytime you increase the probability of making money, you're going to decrease how much money you actually make. That's a link that's always going to be in play. So the appeal of the short put here is you're going to get that high probability of profit, meaning odds of making money are 50, 60, not 50, it's 60, 70, 80%, 90%. We're looking for a high probability here. As a result, I have limited reward, but I could still make it worth my while. The risk is going to be unlimited, but only until the stock hits zero. We'll talk about how I get comfortable with that here in a second. But when you just compare, contrast long call versus short put, there's kind of the side-by-side comparison, okay? Now, when I look at this short put, so short put appeal, obviously you have the high probability of profit, but what causes you to have a 60, 70, 80, 90% chance of success? One reason why that's the case is because you profit from time decay. Unlike a long call where you're losing money as time passes, a naked put or short put, you're making money as time passes. So that helps you. Another reason is because options tend to be somewhat overpriced. And so when you sell puts, you're exploiting that. You're exploiting the overpricing of options, right? And we're essentially going to make money if the stock in question, which in this case I'm going to use XLE, rises, treads water, meaning goes sideways, or even falls a little bit. And kind of the bonus here, the kicker, is worst case, I get to buy something I already wanted to buy. So when you sell a put, you essentially get paid for your willingness to buy the stock. And if I've been wanting to buy XLE anyways, it's kind of a win-win, because if XLE falls, maybe I get to scoop it up at a lower price, and that sets me up for better profits in the future if it ever recovers. So why do I like XLE in particular as a way of playing oil? You could pick an individual stock. We looked at some of them. You could pick Marathon, you could take Apache, you could play Exxon. One of the reasons why I like XLE, first off, is the price tag. $50 is not too expensive, and it makes it where you can build a naked put relatively cheap. Okay, so why XLE? I like the cheap price. Okay, I like the diversification. There's no earnings. You're basically playing the entire sector. There's no risk that you pick a stock and China comes out and it's a stock that has sensitivity to China and it drops even though the sector didn't. So you're not taking that risk. It's more stable. It's a more stable fund. And quite honestly, it's worked very well this year. Okay, XLE has been a pretty good cash flow candidate. So I have this recent history giving me encouragement and reinforcing that this has been a good play of late, and I'm not really, taking a flyer here. So when I look at the options available, just to build out an example here, and then we'll wrap this puppy up, I tend to sell monthly options because they're more liquid than weeklies. I like the 30 to 45 day time frame, so that lines up nicely with an October monthly option. And the delta, if you have a delta column in your option chain, will tell you your probability of profit. You just take 1 minus the delta. So if I sell a 20 delta put, 1 minus 20 or 1 minus 0.2 is 0.8 or 80. So 80% is my probability. If I sold a 15 delta, 85% would be my probability. And when we sell puts, if you want a high probability, usually you're selling a put around a 20 delta or less. So in this case, I kind of like this 45 strike with a 15 delta, getting 45 cents. You could do the 46 strike as well. But if I go look at the chart, $45 I think is far enough away where I got to say, hey, do I think if this breakout fails in XLE, is XLE going to go back down to 45? I mean, that'd be a pretty big reversal, right? So I think the chart supports betting we're going to stay above 45. Furthermore, if it did go down to 45, am I a willing buyer down there? Do I mind 45 as my cost basis owning this sector? I don't. I really like the dividend in XLE. It's got a high dividend yield, which is another reason why I like potentially buying it. So I like where that $45 lines up. If I were to sell this 45 put, I get paid about 44. Let's just make it 45 bucks. If I hit confirm and send, it'll give me the buying power or the margin required when I do the trade. It's about 500 bucks. Now the ROI is not eye-popping, but this is a sector ETF. I'm not doing this on AMD or GameStop or some crazy volatile stock. I'm personally satisfied with around an 8-9% return with a high probability of profit on an ETF for a month. That seems satisfactory to me. So those are all the reasons why I think naked puts XLE, an interesting way of positioning yourself for the breakout that's happened this week in crude oil. And that has been Jedi Options for this Wednesday.
First of all, fantastic as always, Tyler. I love naked puts in general. Matt, just general thoughts first. Anything you got feedback for Tyler? Questions?
No, I love the analysis on this sector because he's absolutely right. A lot of times individual stocks have individual risks to them and they can absolutely get blown out of the water. You're talking about selling a naked put on a sector that you like from a directional perspective. That's number one. And I like combining technical analysis with option strategies. You're looking at a sector, you like this from a price appreciation. It's attempting a breakout. That's not calculated in the deltas that you're selling there. The deltas are just, they don't understand that. They're not reading the price action. They're just a mathematical probability scale. You couple that with your technical analysis, your behavioral analysis, I really do think you can get a positive edge there. And so that's number one. Number two, the 45 strike price. 45 or 46 here make a lot of sense to me. They make a lot of sense to me. If you're looking for pure cash flow and not ownership, I like 46, given the fact that you have the $45 support level that is there to stop that, right? If you don't, I like 45. Owning it at the support level at the bounce, I'm fine too. So 45 or 46, I think, is the appropriate levels there. And so it's a very conservative way. But again, you're talking about, like, if we were to showcase an AMD naked put, yeah, you can get eye-popping ROIs. But you know what else you have with that eye-popping ROI? An eye-popping risk assessment that goes along with it as well.
Mhm.
When you're talking about a sector, you're talking about a tremendous amount of stocks that all simultaneously have to go down. For that to go down 10%, you're talking about this sector getting blown up in that time frame. And it certainly can happen. There's no doubt. But it's a lot more difficult for that to happen than it is an individual company that gets negative news, such as, and a Chevron didn't get blasted today, but nobody would be surprised if Chevron got blasted on a day where it gets downgraded. It would have if the sector wasn't confirming. And so, yeah, I like the diversification Tyler's get. And think about that, 8 to 9% ROI in a month. For a trader that's looking like a directional trade, yeah, they're like, 8 to 9%. You think about this compounded over a year on a conservative system like a naked put on the energy space, that starts to add up quite a bit. Small cash flow over time adds up to a lot of cash flow over time. And so I like it. Love the analysis. Love the strategy selection to combine with the technical setup. Love everything about it.
Yeah, and I think the return is definitely still very, very attractive. I know that people, like you just said, you can build eye-popping returns if that's all you're trying to do is just trick the math.
And you know what
Yeah.
you can do? You can lob a grenade on the energy space cash flow while you still simultaneously look for that directional opportunity on your Apache or on your Marathon or something along those lines. Now, if I'm lobbing a naked put on the sector, I'm probably staying away from directional on ExxonMobil since it is basically the sector itself.
Mhm.
But you got some clean charts on Marathon. You got clean charts on Apache, and so it doesn't cash flowing doesn't eliminate your ability to go out there and be a little bit more aggressive. The one thing I would say, if you're looking at lobbing a naked put on the energy space itself, you might want to also simultaneously contract your position size if you're looking at one of those energy trades.
Mhm. Absolutely. I love it, Tyler. Any other final thoughts you got there, bud?
No, I just like that as we've been talking through this halftime report, the market has stayed firm and held firm.
Mhm.
And just a nice cherry on top going out today with XLE at the high of the day.
A little bit better than sending it off at the market breaking interday support levels like
That's
we
what's
did
been
yesterday.
happening the last week.
Like seriously, like finally give us a breakout. Let's go.
Let's go.
Yeah.
All right. Let's start moving back to the market then. Let's get some final thoughts and start wrapping up the show here. It's been firing off. We're developing nicely here. Give me that intraday. Where are we at exactly? 44.69. So we might be testing and pushing that 44.80 intraday.
Well, you've already gotten above the 44.60 level that we talked about. You saw the momentum start to build early on today. It's been added to as we've been talking and going through Jedi options. The market actually broke out of the 44.60 level. Next stop is the 44.80, and that's the ultimate for me. That's confirmation, guys. 44.80. We close above 44.80. That's confirmation for me.
I agree.
On the daily chart.
Yeah, I agree. Tyler, final thoughts. Anything you got?
I don't know. Look, I was thinking about making a forced joke on levitating this thing, but couldn't come up with a good delivery. So no, I'm just happy with what's going on. I think those of us that have been a little having a little bit of a drawdown the last couple of days, it's nice to see some green on the board and nice to see all those key support levels hold. It maintained the cleanliness of the overall trend in the market. So I'm happy about that.
So far. We're still on the test, but so far, so good.
Yeah, but so far is like always that always should go on the end of everything you say about the market.
Yes, it is.
Yes.
There's no doubt.